I agree.
Rio Tinto had its AGM in Brisbane on Thursday, and despite talk of a slowdown everywhere, CEO Tom Albanese remains pretty optimistic.
For most of our products, the markets are still reasonably robust, and we're still enjoying prices that are much higher than they would have been, say, 5 years ago. They're coming off the boil that they would have been in, say, 2010 and 2011, but that's normal business cycle activity.
But actually, around the time that Tom Albanese was talking, Chinese trade figures came out that were actually quite weak. Annual growth for imports in April were basically flat, up 0.3% compared to market forecasts of 11%. Exports of less than 5% were also down on expectations. And if you break out iron ore figures, over the year imports were up 9% but down 8% in April. So interesting kind of picture on the economy that's emerging. We've obviously got a lot going on in Europe, but China is looking a bit weaker than expected.
Well, it's a continuation of the slowdown, I think. And interestingly enough, iron ore prices have come off about $10 a tonne in the last week or two as well. So it's just all more evidence that China is still in a slowdown mode.
Yeah, I think I certainly think Rio's giving out mixed signals on this. I mean, they're sort of saying on the one hand that we're feeling a bit better about Europe, but clearly they're having a very close look at their capital expenditure going out, you know, anything that's going up beyond a few years. And I think you're getting the distinct impression that other than in iron ore, they're really sort of toning that down. They're looking at it again, they're reassessing it, they're making lots of noise about the costs of actually mining anything in Australia. And I think you're going to find that other than in iron ore, you might see a bit of pullback, and I think we're seeing the same message coming out of BHP.
Well, in fact, we're seeing outside iron ore, Iluka cut its zircon production during the week, and they were blaming Europe, not talking about China. They've been one of the darlings in recent years, but they're a casualty of the European crisis. Iluka's shares tumbled after it cut full year's sales and production guidance by more than 10%. Now, blamed weakness in Europe for the lack of clarity on the global economic outlook. So, you know, it's very interesting to... I mean, obviously Europe's having a big impact at the moment, isn't it?
Well, that's why I don't understand why the Rio guys can say that they're more comfortable with Europe. I would have thought they'd be less comfortable with what's going on.
Well, in the last week, absolutely, because the last week's been as hysterical as it's ever been.
That's right.
I think the bottom line is that we're going to see a number of coal projects abandoned or mothballed. I think I'd be very surprised to see BHP go ahead with its Queensland $10 million project. I wouldn't be at all surprised if Rio cancelled a few of their New South Wales projects or deferred them. And there'll be other projects that will be very closely looked at. And what Albanese is saying is, hey, I've got pressure on prices on the one hand, and my costs of mining here are just going through the roof, and my shareholders are not keen about me putting a whole lot of money into these high-cost mines. And ditto BHP and ditto all the miners, though, not particularly Rio. And this is a very important change for Australia, and we haven't quite, I don't think, come to grips with it and its magnitude.
Yeah, I think we're at a tipping point there, and I think that what will be really interesting to see is if BHP goes along and goes with the outer harbour at Port Hedland, because that's a huge change to their production capacity.
Yes.
It's a huge capital investment.
Yes.
And we're just at a time when we've, you know, as Mike says, the commodity, the iron ore price is really sort of hovering around 140, and if it's not going to go up, it could be in jeopardy.
Well, the market was off 3% this week. I mean, the market's getting quite... It's more or less in correction mode, wouldn't you say?
May.
It's May.
Sell in May and go away.
So they say.
What about poor old Wayne with that mining tax revenue for $3.5 billion? The market's just telling him that it's absolute rubbish. He's got no chance of getting $1, or he gets some dollars, but very little. And it really underpins the fact that as we now see it, that $3.5 billion, if it's $1 billion, you're doing extraordinarily well. And so we're in deficit, not surplus.
Hey, check out this graph that I didn't show on the news this week. It's a comparison of the US market, the S&P 500 in 1987 and 2012. So obviously we're going to have a big surge up to September, and then in October this year, massive crash. What do you reckon?
We haven't got any Spalvins or Homes Accords or all the bondies. They're not in this time, and they were in 87. I guess it's the home lenders who are in now.
The point that I thought when I saw that graph, I thought, yeah, look, I remember 87. I was running the Financial Review at the time, and In May 1987, it was all systems go. Everything was fine. Nobody knew there was going to be a crash in October, on October 21st. In fact, nobody knew there was going to be a crash
At
on
all.
October the 19th or 20th.
Sure.
You know, so you just don't know, do you? That's the thing.
And from memory, May 1987 was a correction.
Was it? Can we get that graph back? No, it's probably too late. But yeah, it was probably a correction. Look at that.
Yep.
Yeah, there you go.
There
You're
you
right.
go.
You're absolutely right.
Yep.
There's a correction, and there's a correction now. So I suppose that's the point.
So are you telling us we should all start selling very soon?
I think that's what he's saying. Yeah. No, October, September.
Oh, I've got a few months.
You got a few months.